Sales is a numbers game. And one of the things I did recently was have a look at the last 100 inquiries that I had and worked out why clients weren't successful in acquiring their business or commercial property. And the results of that is what I'm going to talk about today. G'day, welcome. I'm Peter Bender from Bundaberg Commercial, and I'm a business broker and commercial realtor. There are essentially 5 categories that I worked out in regards to reasons why people weren't successful in getting their assets that they're looking for. It's to the tune, if I looked at 100 buyers' inquiries, 93 were unsuccessful in getting that property. So only 7% of people who are looking for a commercial property business actually managed to buy one. So why the huge dropout? Why are there so many people unsuccessful? A lot of people will say the first reason is budget or finance. I haven't got the money or I can't get the finance. That is a relative truism. A lot of people will go shopping before they go banking. Now, it's almost counterintuitive. If you go to your local grocery store or Woolworths and you've got your trolley full of foods, you already know how you're going to pay for it and you already have the money available, either by card, mobile phone nowadays, or the old traditional form of cash. There's a different mentality to people when they go buying commercial properties and businesses. They will go and have a look at something, find something, and then go to the bank. Now, there's another video that I put together on getting finance. It's actually quite a complicated and difficult process. You don't get away with just a 10% deposit. Quite often you need to have a 40% deposit. And the banks will look at all sorts of things regarding assets and ability to pay. And it's not just the business they look at. It's not as simple as saying, I want to buy that business, can I borrow against the business? No, banks don't work that way, or finance companies. They actually want to make sure that if the business has a bad month, you can still pay for things and that the loan doesn't cripple you on your home front with your budget for your family by having that business and giving that loan. So the first trick for people is at least have that initial discussion with your mortgage broker or financier to say, what can I get, how much can I spend, and what will it cost me? If you have that type of discussion, you're already well ahead of the curve in regards to getting that commercial property in business because you know what you're looking for. And one final point with finance, don't go to the hilt on it. If they give you $1 million to spend, don't go and buy a business for $1 million. Go and buy a business for $900,000 so that you've got money for that first period of 2 or 3 months, because there's always stuff that happens. There's always expenses you hadn't been aware of. There's stuff that you may have forgotten about. The government has magic ways of getting money out of you for transfers of title and land taxes. So make sure you're not mortgaged to the hilt, that you've got enough there to cover that initial first period. Right, that's budget and finance. If you have a look at that and get that cleared out, you can tackle that out. When we look at reasons why we fail at things, there's a predominance in our psychology to say it's not us, it's the environment, or it's somebody else's fault. If we succeed, of course, it's us. It's all my doing. It's how great I am. But you need to recognize that quite often it can be a bit of both. One, or probably the second second reason that people don't get their commercial property or business is the type of investment that they're looking for or the specific needs that they may have. I've had a client, for argument's sake, who wanted to get a commercial property and he's got the finance, he's ready to go, but he has one specific need. He works on mobile cranes and they are very tall vehicles. So he needed a shed that had a huge access. It needed to have a really high roof and a really high door so that the trucks with the cranes can actually get in. Looked as hard as we could. Nothing in town was anywhere near the height that he has. So that's an example of a specific need that may detract you from being successful. So have a look at those sort of type aspects. Is there something unique that you're looking for? And is it actually available? Because you'll find that the numbers of opportunities will be very small if your needs are too specific. Similarly, the type of investment. I'll have a lot of people saying, I need a building that looks like this, that is in that location, that has that space, that has that configuration, that has that neighbours, has that type of rose in the front garden, and is pink. That type of investment may be a little bit hard to get hold of. What you are probably better off doing is having some flexibility and try and go as wide as you can rather than as narrow as you can. Because what that will do is increase the opportunities you have available, and think outside the box sometimes. For argument's sake, I have a lot of people looking for passive investments, and the big three on search engines, when you go through like Seek Business or commercial real estate looking for businesses, online businesses, laundromats, and car washes. They're the top three, have been like that for about the last 18, 24 months. There's not a lot of options in that. So look at the reason that you're looking for those type of businesses. If it's a case of you just want a passive income, well, there's plenty of other options out there that you can provide for passive income, and you will find that they're much better value. You could get a retail shop that's got an existing team and a manager in place. All you do is bank the cash. You could have a look at any number of businesses that may have an owner who's had enough of being in business and just wants to work the business, transitioning into retirement or something like that. Have a look at that. There may be other industries. There's a business that I've got where the owners of it will be able to work from home, but it has a physical site, has staff on site. These are things that you can have a look at. So try and widen the type of investment that you're looking for. If you're looking purely for commercial, okay, commercial's good. Pretty hard to get hold of. Have a little bit of a look at retail property as well. People say, oh, retail's poo-poo. Well, this is what you want. Buy it in the down times when the price is really, really good. If you do your homework, you'll recognize that retail is really having a resurgence through there. So, if you're looking for commercial property, also have a look at retail type properties. Spread that wide. Spread wider you're searching through it. Probably the biggest reason why people don't get their commercial property or business has to do with motivation, or more particularly lack of motivation. I am absolutely in awe and full respect of our Olympians right now. Now this video will age. We've got the middle of the Paris Olympics. There are so many Aussies who are in their second and third and even fourth Olympics. Now that is true motivation, especially when they've had injuries, setbacks, what they would deem failures. Maybe they finished fourth in the world rather than third, second or first. But that is true motivation. I'm not saying you need to be that focused and supported to get your commercial property or business, but you need to be motivated. There are a lot of people who will just say, oh, I'm just looking. That's cool. Look around, have a look on the internet. When you're ready to purchase, come and talk to me. You've got a big group of people who are novices to buying commercial properties and businesses. They're the first timers. It's only when they start getting into the process that they start to understand what their level of motivation is. They can be, as I say, buyers are as nervous as sheep, and novices are the worst ones. Because it is a scary thing to do. It's a change of lifestyle. It's an opportunity. We all hear stories about opportunities that fall apart. But, look at it realistically. Do like I do. Do some stats. Talk to people who've run businesses. Have they succeeded? Have they not succeeded? Why not? Who's bought commercial property? Have they succeeded? Have they not? Why not? Or why have they? Get that sort of detail organised for your motivation. You really need to understand why you want to get the commercial property business. If you're looking for changing your lifestyle, increasing your income, that's great. But you really need to be motivated. How much do you want? When do you want it? In what format do you want it? What are you prepared to sacrifice for it? Sacrifice is an interesting word. It's probably better explained as delaying something else to get something better. For example, I may sacrifice getting a couple of pizzas and a couple of beers, not that I drink, and instead I can pay my entry fee for one of the chess tournaments. I'm a big chess nerd. It's a meaningless example, but you get the concept. What is your level of motivation? What are you prepared to do? How many hours are you prepared to put in each week? What is your financial plan? How are you going to put that deposit together so you can get it up and running? Why do you want to get that? Is it because your job really sucks? You don't like your boss? That's okay. Change that motivation. That doesn't mean that you're motivated to go forward to buying a business. There's two things in motivation from my experience as a manager. There are demotivators and there are motivators. Make sure that the reason you want to buy your commercial asset is a motivator. There's a reason that you want to do it. You want it to get income. You want to get that freedom of lifestyle. You want to have something when you move into a new town, as opposed to demotivators. Demotivators, we're just past financial year. A lot of people are getting their annual statements and they look at it and say, wow, this is a miserable paycheck. I'm demotivated in this job. I might go and get a commercial property or a business. That's not going to get you through the process. You're going to be one of the 93% that aren't going to succeed. So you need to have a strong level of motivation. There's also a category of people who are just interesting. Everyone's unique in their world. Some people just like to play the game. They like to pretend that they're going to buy a business, and they'll sign the confidentiality agreements, they'll get all the material, they'll have negotiations, and then when it comes to the end of the day, they just don't purchase. They're really more into the fun and the venture. They're very annoying, and sometimes I feel like actually invoicing some of these people for my time, and my time's about $1,000 an hour nowadays. So it's a real annoyance. So if you're in one of those categories, don't ring me, okay? Do me a favour and we'll still be friends. Now, these are external factors that we spoke about. Budget and finance is from outside of us. Type of investment, okay, that can be your choice. So that's my reason why I'm not going. My type of investment is too narrow. Or it could be an external factor. You're not getting it because there just is no suitable investment in that category. Motivation, that's definitely an internal one. And the next one that we have a look at, and this is probably for those who are the number crunchers, you're looking at return on investment, or you might be looking at the margins of a business. You may even look at the break-even time. You're looking at some sort of financial reason for buying that business. And interestingly, quite often it's not the fact that if you get the numbers, you'll purchase. It's more if you don't get the numbers, you won't purchase. Once again, it's like a demotivator rather than a motivator. I'll have people who are saying, I'm looking for something at 7.5% cap rate or 7.5% yield, depending on which way you want to look at your mathematics. And if it's not in that category, they're not going to look at it. Okay, that's fine. That's a very arithmetic way of looking for things. However, there may be other options. You may have a 20-year lease associated with it. So once again, be a little bit flexible on your ROI. ROI will change over time. So when the markets are good, your ROI might be higher. When the markets are flat, your ROI might be lower. So you need to recognize that. Different regions will have a return on investment that is of a different value. In Harvey Bay, for argument's sake, you can get a return on investment of around about 10% on some properties. In Bundaberg, you won't get anything more than about 7.5 to 8. So are you prepared to go to a different region or perhaps a different geography? Margins, that is more to do with businesses. It's interesting, people will quite often look at the financials and they say, oh, there's not enough profit in there. And I say, what sort of profit are you looking for? And there's just deathly silence. They have no idea. So be clear on what you're looking for. For guidance, I've been a business consultant for probably 7 to 10 years and run many, many businesses. A solid business is one that'll have about a 20% net profit. Anything above that, and you're starting to get a very good business. So if you need to have a look at margins, make sure you know what you want. Allow enough capacity in there to run with. I love Beryl Solomon is one of the people I watch videos of. And he's Jewish and he's a business person. And he says the reason Jews always work on high profile businesses or high margin businesses is that it's expensive to be a Jew. You usually have a lot of family. You have expenses that are just simple things like food. You can't go and get your normal type of food. You've got to get kosher food and the likes of that. So they look for businesses that are very high margin. So that's the sort of philosophy. Make sure you know what margin you're looking for and understand why you're looking for that sort of margin, and what are you prepared to put aside if you've got a smaller margin, but maybe more security. Perhaps you've got market share that's huge. If you've got 80% or more market share, take a smaller margin, because you're not going to lose in competition. You just got a long-term cash cow. Break-even time is another aspect. Break-even time is, if I bought a business, how long till I get my money back? So if you bought a business that was $200,000 and it made net profit of $100,000 a year, at the end of 2 years, provided you haven't spent any of the profit, you'll have got your money back. I have seen a lot of differences in understanding break-evens from clients. They range from some clients who want their money back in 2.5 to 3 months, out to clients who are happy to take 3 to 4 years. Once again, it depends on the business involved and the industry and the skill sets. There's a whole range of it. But if you're looking at break-even time, and it's a really good factor for you to look at, take it through there. And for argument's sake, I have a look at my YouTube channel as an example. It costs me time and money to put out these videos, and one day hopefully I'll get monetized. Is it going to come back and return the money? Yep, but it'll probably be 12, 18 months, 3 years. So I need to have a long-term view when I produce all these videos for you, and hope you enjoy it. So make sure you hit like and subscribe. Give me some feedback. Let me know that I'm doing good and I'm giving you the stuff you want. I'd hate to be sitting here 3 years' time still with the number of subscribers I got. So break-even time is something that you do need to consider. That's roughly the financial reasons, and it would be one of the key factors for professional investors. Those who are novices don't tend to look too much at ROI apart from what their consultant or accountant tells them to look at, or margins or break-even time. The financials at that depth are more for investors who are experienced, or what I call them, sophisticated investors. Investors who sometimes get outside the legal realms of what can and can't be done. Perhaps the last aspect that stops people from buying their commercial property or business is fear of the future. I quite often get people who are at the precipice. They're at the tipping point. They're about to make an offer. This has ticked all their boxes for them. They've surprised themselves in being able to find something that suits what their needs. It's in the budget, it's in the area, it's in the industry, it suits their motivation and skill set, but they're just worried about the future. Is the interest rates going to go up? Is the interest rates going to go down? What are the elections going to do? Is the legislation going to change? What's the market going to do? What happens if I have all this and it doesn't work out as I plan? Now, this is a valid concern. However, it's an emotional concern. Not that I'm saying bad things about emotions. I mean, I'm a chess player. I'm not regarded as the world's most emotional person. But you need to balance that. I read a while ago that some psychologists did work on the area of anxiety, and it found out that 97% of the issues that someone would worry about did not eventuate. So if you were someone who was anxious and you were worried about the weather being bad, a tornado coming through, a cyclone coming through, or whatever, if you had 10 of those reasons, you could actually guarantee from the research that 9 of those reasons weren't going to eventuate. But you have got yourself into a blubbering mess worried about the future. I have an interesting switch on that. I am curious if the same happens for optimists or entrepreneurs who think, wow, this business is going to go gangbusters. I'm going to get the staff I want. I'm going to get the new market share. I'm going to be able to get the building next door and expand into there. There may be 10 things that an optimist has a look at and wants to buy a business for. I'm curious if 9 of those things don't eventuate as well. So if the balance of probability is the same, whether it's a positive fear or a negative fear. But that's one of the things to look at. Fear is best defended by statistics and knowledge. If you're worried about something in the future, try and analyze it, have a look at it. Like I said, 93%, these are the types of things that you look at. So if you're worried about interest rate rises, and in this current scenario, once again, the video will age quickly, people are worried about the home loan interest rates and interest rates in general, including business rates. The thing that concerns me is it is only recently in the long-term trend that the interest rates are where they are is almost average. When I got our first house, yeah, I know I sound like an old guy talking about dad sort of stuff, back in the good old days, our first house had an interest rate of 17%. Yeah, and they're crying now about the fact that they got 7%, and they think that's high. It may well be, it may well come down a little bit, or it may well go up. Make sure you put some figures on there. So if you're worried about interest rates going up, have a look at the long-term trend, have a look at the macro trends, have a look at what's happening in businesses, what are the things that drive interest rates, what's the inflation rate like, what's the employment rate like. Start getting some data together and talk to some knowledgeable people. Your local greengrocer probably isn't the option, apart from, he'll tell you if his business is doing good or not. And that's one of the big things I look at. I look around my town right now, and business is very solid. Owners are happy. Their financials that are coming in for this financial year are strong and healthy. That indicates to me that, we're probably going to have a good, strong economy, a good time to buy a business because you're going to get that growth side. On the downside is I'd probably expect another interest rate rise. There you go. There's one for the forecast. Let me know in the comments if the interest rates have risen since I put this video out. All right, so they're the 5 main categories that we look at. If you want to increase your chance of getting that commercial property or business, make sure you've got your budget worked out before you go shopping. Have a look at having a wide spread of types of investments or specific needs so that you rather than make the field smaller, make it larger. If you've got 100 things to look at, then make it smaller. But start off big and then see how you go from there. Make sure you understand your motivation. If you want to have as a hobby and a research, that's fine. Go and do that. But don't freak out and don't spend too much time. And please don't waste time from professionals like us. If you're looking for return on investments or margin or break even, truly understand what it is that you need in that and why you need it. And finally, for the fear of the future, look, life could just as easily be good as it could be bad. I prefer to think it's going to be good. So catch you to next week. Leave me some comments on what your thoughts are for reasons why people aren't getting their commercial properties and why they're not successful. And in the meantime, I'll catch you next week. Take care and God bless.